The Fed just dropped a bomb on Wall Street, and your portfolio might never be the same. One name is causing absolute chaos in the markets right now. Stocks are tanking, crypto's bleeding, and investors are asking, is the era of easy money over? I'm about to show you exactly what's happening, why Wall Street is in full panic mode, and most importantly, how you can profit from this chaos while everyone else is losing their minds. Stay with me till the end because I'm going to give you the one strategy that's going to protect your money in 2026. Let's get into it. Yo, what's good, everyone? I'm Henry, and welcome back to The Money. If you're new here, hit that subscribe button right now because we're about to break down the Kevin Warsh situation that has everyone talking. This video is going to save you from making costly mistakes. And listen, before we dive in, do me a solid, smash that like button. It literally takes 1 second and it helps push this content to more people who need to hear this. Drop a comment below and tell me, are you buying the dip or staying cash? I want to know what you're thinking. All right, let's break this down. So first, who the heck is Kevin Warsh, and why is this one guy causing a multi-trillion-dollar market meltdown? Now, I'm recording this on February 2nd, 2026, and the situation is evolving fast, so pay close attention. Let me paint the picture for you. Kevin Warsh was a Fed governor from 2006 to 2011. That's right, he was sitting at the table during the global financial crisis, the one that almost took down the entire world economy. But here's what makes Warsh different from every other Fed official. While everyone else was screaming, print money, drop rates, save the banks, Warsh was the one guy in the room saying, yo, hold up, this is too much. He warned that stimulus and crazy low interest rates were excessive. He wanted higher rates for longer. He was sounding the alarm about inflation before anyone else even cared. This dude was like the Cassandra of the Fed, warning everyone about dangers they didn't want to hear. And get this, Warsh straight up opposed quantitative easing. That's when the Fed prints trillions to buy bonds and pump liquidity into the system. He said the benefits were limited and the risks were huge. He fought against it tooth and nail. But when he realized he couldn't stop the money printer, you know what he did? He resigned. In 2011, he walked away because he couldn't stomach watching the Fed inflate the biggest bubble in history. This guy earned a reputation as a hardliner. He cared more about currency stability and the real economy than propping up your stock portfolio. If keeping the dollar strong meant your tech stocks had to come down, he was cool with that. So now you see why Wall Street is absolutely terrified. This is not some puppet who's going to keep the party going. This is a guy with principles, and those principles are the opposite of stonks only go up. All right, so why is Wall Street in full meltdown mode right now? Let me spell it out. Warsh has been vocal about criticizing all the stimulus that's been pumped into the economy for the last 15 years. He said it created massive asset bubbles. Stocks, real estate, crypto, everything got pumped way beyond their actual value. He's argued it made inequality worse. Why? Because rich people own assets. So when you inflate asset prices, guess who gets richer? Not the guy working 2 jobs to pay rent, the guy with a stock portfolio. He's also said all this free money destroyed the Fed's credibility. Nobody trusts the Fed anymore because everyone knows they'll just bail out the markets every time things get shaky. There's no real discipline, no consequences. Now, here's the bomb. Warsh has always preferred tighter monetary policy and a stronger dollar. But what were investors pricing in for 2026? Easy money, rate cuts, more stimulus, the gravy train continuing forever. So when rumors started flying that Warsh could be the next Fed chair, markets went into immediate repricing mode. Stocks tanked, bonds moved, crypto fell off a cliff. Because if Warsh runs the Fed like he wanted to in 2008, the easy money party is done. And that terrifies people who spent 15 years getting rich off Fed bailouts. But here's what's wild. This is where things get absolutely fascinating, and honestly, totally confusing. President Trump has been super clear about what he wants. aggressive rate cuts, and a weaker dollar. He wants money flowing, markets pumping, exports competitive. He wants the economy running hot. That's classic Trump, pedal to the metal. But here's the massive problem. Everything in Warsh's track record says he's the complete opposite. He's Mr. Discipline, Mr. Restraint, Mr. I don't care if your stocks drop. So markets are sitting here like, wait, what's going to happen? Is Warsh going to cave and do what Trump wants? Or is he going to stick to his guns and torch the market? And listen to this. Warsh has made comments in the past suggesting that falling asset prices might be an acceptable trade-off if it means refocusing on the real economy instead of just making rich people richer. Translation? He's totally fine with your portfolio going down if it means fixing the actual economy for working people. Now that's brutal honesty. Wall Street hates that. But you know what? Maybe that's exactly what we need. Quick pause. If you're getting value from this breakdown, make sure you're subscribed. We drop content like this every week to keep you ahead of everyone else. Hit that bell icon so you don't miss a single video. All right, back to it. Now here's where the plot thickens even more, because recently, Warsh has been saying things that sound like a complete 180 from everything he stood for. He's now supporting lower rates to help the housing market. He's arguing that AI could be disinflationary, meaning it could actually help keep prices down. And he's been signaling that he's totally aligned with the White House. So what's going on? Critics are screaming that this is a political flip. They're saying he's just telling Trump what he wants to hear to secure the job. And look, that's totally possible. This is politics. People say what they gotta say. But supporters argue his views have genuinely evolved. The economy in 2026 is not the same as 2008. We've got AI disrupting everything. We've got completely different labor markets. We've got new global competition. Maybe Warsh looks at this new world and thinks differently. Personally, I think the truth is somewhere in between. But what matters for you is this. There's massive uncertainty right now. And when markets don't know what's coming, that's when you see wild volatility like we're seeing today. Let's talk dollars for a second, because this is absolutely crucial to understand. Trump wants a weaker dollar. Why? 3 big reasons. First, it makes American exports cheaper and more competitive globally. American companies sell more stuff overseas. Second, it supports stock prices because when companies earn money in foreign currencies and convert it back to weaker dollars, their profits look bigger. Third, and this is the big one, it makes government debt easier to manage. If the dollar is weaker, the real value of our $36 trillion in debt goes down. That's great for the government, even though it means your purchasing power as a consumer goes down. And all this is happening while China is pushing hard to make the yuan a global currency that can compete with the dollar. This is a massive geopolitical chess match. So Warsh's old preference for a strong dollar goes directly against what Trump wants. But if new Warsh is real and he's willing to play ball with a weaker dollar, that changes everything about how this plays out. This is why you're seeing so much confusion in the markets. Nobody knows which version of Kevin Warsh we're getting. Here's what I really need you to understand. This sell-off we're seeing, it's not a fundamental economic collapse. This is markets repricing uncertainty. For 15 years, investors got super comfortable with one playbook. The Fed always provides liquidity. The Fed always bails us out. Stocks only go up. There's no real downside risk. That became the assumption. Everyone got lazy. Everyone got complacent. But now, investors are asking scary questions. What if that era is over? What if we're entering a new world where the Fed doesn't automatically save us, where stocks can actually fall and stay down for months or even years? If you've been conditioned to believe in the Fed put, that the Fed will always catch falling markets, this is absolutely terrifying. But you know what? This is also healthy, because it forces everyone to actually think about value again, to think about risk again, to stop just blindly buying because numbers go up. All asset classes are adjusting right now. Stocks, bonds, real estate, crypto, everything's getting repriced based on this new uncertainty. Now let me give you some critical perspective. because I don't want you making emotional decisions. Market declines are normal. Historically, the stock market sees 10 to 20% drawdowns even in strong bull market years. Since 1980, the average intra-year decline is about 14%. But here's the kicker. Most years still finish positive. Big, catastrophic, multi-year crashes, they're rare. And when they do happen, recoveries typically occur within months to a couple years max. And here's the stat that should calm you down. Long-term investing overwhelmingly wins. Look at any 10 to 15-year period in market history. Investors have an extremely high probability of positive returns, even when they bought during volatile, uncertain, scary times, exactly like right now. So, if your portfolio is down 10, 15, 20%, I get it. It feels terrible. But zoom out. This is part of the game. This is how wealth gets built. Buying when things are scary and everyone else is panicking. So, what's the actual strategy for surviving and thriving in 2026? It's so simple it almost sounds boring. Buy and hold long term. That's it. Price drops? Those are opportunities, not disasters. When quality companies go on sale, that's when you should be getting excited, not running for the exits. You want to know what destroys wealth? Panic selling, trying to time the market, jumping in and out based on headlines. That's what wrecks people. But consistent investing, dollar cost averaging, buying quality assets, holding through volatility, that benefits from chaos. When prices are low, you're buying more shares. When the recovery comes, and it always does, you make bank. I know it's hard. I know watching your account bleed red every day is painful, but the investors who build generational wealth are the ones with the discipline to stay in the game when everyone else is losing their minds. Here's my final takeaway for you. Regardless of whether Kevin Warsh follows Trump's playbook or goes rogue and does his own thing, the long-term outlook hasn't changed. Markets always recover. Patience is always rewarded. And moments of uncertainty like this, these create the best opportunities for disciplined investors who are willing to stay the course while everyone else is panic selling. So don't let fear control your decisions. Stay informed, stay disciplined, and keep your eyes on the long game. That's how you win. Before we wrap up, I gotta tell you this. The content in this video is accurate as of the publication date, February 2nd, 2026. Markets change fast, situations evolve, so always do your own research. And listen, this video does not constitute investment advice. I'm sharing information and my perspective, but you need to make your own decisions based on your personal situation. Talk to a licensed financial advisor if you need personalized guidance. All right, everyone, that's it for today. If you made it all the way to the end, drop a comment right now and tell me, what's your biggest concern about the markets heading into the rest of 2026? I read every comment, and I'll do my best to respond. If you haven't subscribed yet, what are you waiting for? Hit that button, turn on notifications, and absolutely smash that like button if this video gave you clarity. Remember, stay smart, stay patient, and I'll catch you in the next one. Peace.